Advisory services offered through VestGen Advisors, LLC, an SEC-registered investment advisor. Securities offered through Private Client Services, LLC, member FINRA and SIPC. Private Client Services and VestGen Advisors, LLC are unaffiliated entities. Any information discussed does not constitute investment advice. VestGen Advisors and Private Client Services do not offer tax or legal advice. People of Chicago, welcome to In the Know Radio with Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners. You want help from someone you can trust, someone who knows what it takes to get retired and stay retired. Today, Craig's going to teach you what you need to know. So get ready to learn something that could change your life. Get connected to the show by calling 833-964-PLAN or go to getretiredstayretired.com. And now, here's Craig Bolanos.
Hey, good morning and a very happy Sunday to you and yours. You deserve to thrive in retirement. We don't want you to simply survive retirement. And in case you didn't know, it's volatile out there. That whole idea of buy the rumor, sell the news, that explains the Dow's run up over 48,000 and its very quick retreat ever since the government reopened. Are you going to get that interest rate cut this stock market craves, that this job market needs in December? Well, the futures used to say there was a 95% chance. Now it's down to a coin toss. What does that mean for you, your money, the bonds in your portfolio? And above all else, we're going to give you some timely advice that you need on one of the big stories that's afoot that people aren't talking about enough, which is digital currency. But David, here we are. We're the middle of November. People got 6 weeks left. What are the things that people need to be handling between now and the end of the year to make sure that they pay as little in taxes as possible?
Yeah, two ideas come to mind right away. Number one is maxing out those qualified retirement plans. So it could be trying to squeak in as many dollars to your 401k by going in and changing your deferral percentage for the last couple of pay periods. It could be maxing out individual retirement accounts like IRAs, things of that nature. And then I think the big part that's a little bit more challenging is trying to take an assessment of where you are for your non-retirement accounts, your joint accounts, your trust accounts. How many capital gains do you have? Will you have phantom income tax this year? What do your dividends look like? But I got to tell you, Craig, if there is one thing I think should be top of mind for investors, because of the trip up that we had in the spring, I think a lot of people are going to be set up for some phantom income tax this year. Now, that's our terminology for it, but explain to our listeners what phantom income tax means to them.
Phantom income tax is something that you do not want. And let me tell you where it's primarily derived from. Where it's primarily derived from is this concept of asset location. And by asset location means holding the wrong type of investments in the wrong type of accounts. So everybody knows that when you're constructing a thoughtful, intelligent, long-term portfolio, you can do that by buying individual stocks and bonds. You can do that by participating in exchange-traded funds. You can also do that through various forms of mutual funds. And whoa, there you go. There is the hidden danger. So remember, if you own stock mutual funds, that's an equity mutual fund in your non-retirement account, I say danger, Will Robinson, because in certain years, and we got to think 2025 is going to be one of those years, these stock mutual funds tend to pay out a large capital gain in December. Now, I know what you're thinking. I want to buy that mutual fund before it pays out a large capital gain. No, you don't. Why? Because what happens is when you're in a mutual fund, you're in a pooled investment with all these other shareholders. And there are lots of shareholders who panicked during the market meltdown that was called recession paranoia in April. And all these investors yanked out their money. And when they yanked out their money, the mutual fund manager needed to ring the register on all these great stocks, these great American companies. And that creates a tax bill. And guess who gets to pay everyone's tax bill at the end of the year? It's the investors who remain in the pool when it distributes something called this capital gain. I don't mind paying taxes. You should never mind paying taxes on something that you bought and sold for a profit, but you should have a real problem paying income taxes because someone else's behavior caused them to panic, caused them to remove the money, and now you're sharing their tax bill. David, that's what a phantom capital gain is, and 2025 is going to be a nasty year. So break it down on what people should do, and I'll tell them how they can have us help.
Well, I think the first thing is you need to take a look, get an assessment of where, if you own any of those positions, they're going to pass through the distributions, because we have a ticking time clock. We're midway through November. Most of these distributions get paid out in December. So you only have a couple of weeks, but it is not too late. Depending on what your portfolio looks like, you might want to get out of the way before these distributions come through. Now, the reality is you don't have to own those investments. Let us show you a way to avoid those and be a little bit more aggressive on your after-tax returns. One of the strategies that we used for that is direct indexing. And that comes in lots of different flavors, but give our listeners the general concept of direct indexing, Craig, because this has been a banner year for those types of strategies.
Absolutely. Well, first, the phone number, 833-964-PLAN. That's 833-964-PLAN. Go out to our website, getretiredstayretired.com, getretiredstayretired.com. To summarize, we just talked about the ticking time bomb that is likely December 2025. And that ticking time bomb that's December of 2025 is all these stock mutual funds are about to distribute capital gain distributions. We call it phantom income. If you don't want to be paying taxes on other people's gains, it's time you get educated, empowered, and know the tools and resources you have to sidestep before your 1040 gets whacked in 2025. 833-964-PLAN, 833-964-PLAN. Go out to our website, getretiredstayretired.com. Now, I think you would agree that if you own the 500 companies that make up the S&P 500, despite the market's pullback just this past week, the S&P 500 is still up double digits year to date. But did you know that as of the end of October, there were 226 of the 500 names. Let me say that again. 226 of the 500 names that were negative. You know what that means to me? That means for the right type of account, that's 226 tax deductions that you could achieve by direct indexing, where you can't do that with the ETF or the mutual fund. If you want to learn more, you absolutely could. Heck, you can. 833-964-PLAN, 833-964-PLAN. Go out to our website, getretiredstayretired.com. So now that you've got direct indexing as a tool belt, I got to give everybody another opportunity to be wicked smart here. Everybody knows this government shutdown was all about money. It was all about fiscal responsibility, and fiscal responsibility shows up in one place. That fiscal responsibility shows up in the fixed income arena, the bond market. That is the yardstick, the measurement of fiscal responsibility. And I've got news, everybody. If you're not doing tax swaps on your bonds, you absolutely need to. David, talk about how VestGen Wealth Partners does tax swaps to keep people invested with the same credit quality, the same interest rates, the same month of maturity. But that's how we drive tremendous after-tax results for all of our stakeholders.
Yeah, so I'll try to give you a quick example. Let's say you own a municipal bond issued by the state of Georgia. A simple tax swap would be to sell that municipal bond issued by Georgia for, let's say, a similar bond, same maturity date, same yield, issued by the state of Texas. So if you did the research and you figured out that those were the same credit qualities, they had similar maturities, but you could take a loss on Georgia, swap it out for something that looks and feels the exact same. That's the concept of tax swaps and fixed income. So I think the big thing that we want to drive home is a lot of times when we think of tax harvesting, people think of their equities. But if you're a balanced investor, and you're only doing the tax swaps on your equities, you're missing the other 35% of your portfolio. We want to maximize that going into 2026. This is a great time to not just go through a portion of the portfolio, but I go through everything, because remember, if the Fed doesn't cut rates, there's going to be even more volatility in the bond market. That's going to give you lots of opportunities to do a recalibration right before the end of the year.
So it might sound complex, but it's not. David, you said it well. Maybe you've got a AA Georgia Muni maturing in June of 2030 with a 5% coupon. I don't think a Texas AA Muni maturing in June of 2030 with a 5% coupon is much different. If you can sell bond A, pick up bond B, you stay invested, you have the same defined outcome, but you're going to go ahead and get a tax deduction that you need. Those small little ideas, those little things, that attention to detail, that's what you get when you work with a team. You can't afford to go with a solo advisor. You need to go with a team, because you need dedicated traders, dedicated research analysts. You need all of these people coming together under one roof in a cohesive strategy to elevate your game. That's our theme for 2026 coming into the end of 2025, is we want you to level up. David calls it leveling up. I want you to level up your game. So what's your takeaway from today? If you're not direct indexing, you need to. If you're not doing individual bonds with tax swaps and you're in the right type of accounts, the right type of investor, you need to, because we too want everybody not to survive. We want you to thrive in retirement. I want to give you more. You want to learn more. You got to hang tough. That's not a shout out to New Kids on the Block. That's just what you need to do in order to stay engaged with us this morning. 833-964-PLAN, 833-964-PLAN. That's GetRetiredStayRetired.com. You're listening to Craig and David in the Know, AM 560. The Answer.
You want more in the Know Radio? You want more in the Know Radio? You can't handle more in the Know Radio. Okay, yeah, you can. And it's on AM 560. The Answer. Welcome back. Here's more with Craig.
All right, you're taking notes. In that first segment, if you missed our discussion of direct indexing, you got to go back and check it out. Connect with us online at GetRetiredStayRetired.com, because it's time for you to level up your game so you can elevate your positioning going into 2026. Think beyond the easy. Go beyond the index mutual fund. Go beyond the exchange traded fund. Move into the direct index. It's the evolution that everybody needs to see, that nobody's giving you, because they don't have the time, the talent, the expertise, and the organizational staff to pull it off. We do at VestGen Wealth Partners. Away from that, remember, it's all about the scorecard. The scorecard I'm referring to is your fixed income. And if you're not doing swaps and you have not yet introduced permanence and definition into your bond portfolio, where have you been? You got to have those things in mind if you want to be successful, because again, you control the outcome. It's you against you, and we're here to help you do such. 833-964-PLAN, GetRetiredStayRetired.com. David, in our first segment, you also mentioned some year-end housekeeping items that people needed to do, making sure they're topping off those 401ks, make sure they're topping off their IRA contributions. But David, if you have one message, now that we're in open enrollment, so whether this is for you, our listener, maybe it's for your niece, your nephew, your son, your daughter, your granddaughter, David, for those who are lower consumers of healthcare, what is the Swiss Army knife, and how can they use that, and what should they be thinking about doing now that we're in open enrollment season?
HSA, health savings account, right? Lots of corporate health insurance plans are changing and evolving, and more people are moving into these high deductible plans in conjunction with the health savings account. This is the time when those conversations really start to heat up. But I think what you're referring to is this Swiss Army knife, right, Craig, is triple tax benefits, tax deduction, tax deferred growth, likely tax-free distributions at a later date. And to your point, if you're a low consumer of healthcare, this is really one thing that you should look at. So generally speaking, not for everybody, but for younger people that are actually going to put the money in the health savings account, if you're someone that's not going to the doctor, doesn't go to the hospital, this is a great way to boost your long-term retirement savings, because at some juncture, you will likely use the money in the HSA account. But why not take the HSA money, grow that money, and have it ready to go if you want to bridge the gap into Medicare when you're a little bit older. So the HSA, I think, is becoming more popular, but I will put that disclaimer on it, just like you said. It's not right for everybody. I have young children. I don't use the HSA. If it was just me, though, I probably would use an HSA compatible plan. So it's a unique situation for everybody. But if we're trying to create wins at the margins, the HSA might be something you want to add to your tool belt.
Absolutely. So that health savings account is the Swiss Army knife of financial planning. I've got a 24-year-old. I've got a 22-year-old. They're low consumers of healthcare because they're young, they're healthy, and they have a mechanism through which they can put away $4,300 a year that's tax deductible. They then get the opportunity to invest that $4,300 contribution into a slice of America. I call them great companies of America. And courtesy of the eighth wonder of the world, I call it the miracle of compounding, that $4,300 tax deductible, tax deferred contribution is going to grow each and every year, so that by the time my adult boys retire, they're only 22 and 24, they're going to have hundreds of thousands of dollars, assuming they keep putting money away each year for the next 10 years. They're going to have their retiree health care preordained in a bucket that is completely tax-free. If you want to learn more, you can. 833-964-PLAN, 833-964-PLAN. Go out to our website, getretired.stay-retired.com. If you've got an existing HSA, but it's not properly invested, call us. We'll help you get it invested. David, what else do we need to know on the subject?
Well, one other tidbit on open enrollment is something that we called prepaid legal. And as we're talking about some of the things that younger investors should consider HSA. I always tell young families that if they don't have any legal documents, maybe they should leverage their corporate benefits to get that done at a relatively low cost. That can be done oftentimes through prepaid legal services, which is often offered by large companies. That being said, if you're a family that's recently retired or nearing retirement, a prepaid legal plan might not be the best for you. You probably need custom estate documents coordinated with your retirement plan and investment strategy. And if you're someone that said, hey, you know what? I've got documents done, but I did them when the kids were younger. That was 20 to 25 years ago. To use your language again, Craig, level up going into 2026. Give us a call, because if you're frustrated that your financial life is so compartmentalized, where you've got your attorney over there, your insurance guy over here, your investment person over there, our job is to bring that all together for you. Because again, creating synergies amongst these different topics, that is real financial planning today. And that is what we deliver to all the families that we work with.
So let's use that as a reminder. Going into the end of the year, I'm not going to talk about financial fitness. I'm going to talk about your estate fitness, your overall well-being. I don't think you're going to die. You're not going to die, but estate planning is about advocacy. It's about putting you in a position to be successful. So I ask you the following questions. Do your existing documents allow your spouse to contact Medicare or Social Security on your behalf? Probably not. I think you ought to include that. Number 2, you've got a digital footprint. I didn't say digital currency, but you've got a digital footprint. I'm willing to bet you've got a Facebook account, a LinkedIn account. I'll bet you have an email account. I'll bet you have a whole big part of your financial life that is actually online. Have you created a digital executor? Have you created a digital trustee? If you don't have an estate plan that's addressed digital asset protections, you're coming up short, and you could end up being exposed. losing things. I'm not just talking about losing money and property. I'm talking about losing memories. I'm talking photos. How many of your photos live online? So yeah, let's level up your documents. Let's make sure that those people that you know, love, and trust, and they love you back, are in a position to advocate for you when it comes to your pension, it comes to the taxing authorities, it comes to health insurance, Social Security, Medicare, digital asset provisions. And yeah, you probably live in Illinois. And if you didn't know, Illinois is broke. And maybe that's one of the reasons Illinois and the Illinois Department of Revenue has decided to maintain a death tax and estate and transfer tax that ensnarls way too many people. What have you done in your estate plans to neuter the Illinois death tax? If you don't know, I think you need to. If you want to learn more, you absolutely can. Connect with us, 833-964-PLAN, 833-964-PLAN. Go out to our website, getretired.stay-retired.com. David, let's give people some visibility into what it's like to work in a multifamily office for regular people versus the traditional model of financial advice that we stand against at VestGen Wealth Partners.
Yeah, I'll give you an example from the other day. Someone just asked the question, what happens when we're not here? And I said, well, you know the answer because you've been working with us for several years. And they said, yeah, your business card is in the file and it's marked as first person to call. And you know why it's the first person to call? Because we sat in all the estate planning meetings, not just the attorney, the advisor, and the estate planning attorney. We understand what's important about money to you and what your value system is. And we're here to make sure that things get done efficiently when you're not here. On the tax side of things, we're in contact with your CPA. Since we do taxes here, we know our way in and out of a 1040. So this isn't just we have investment accounts. We have investment accounts. We have intimate knowledge of your estate plan. We understand your tax return. And that's what you're getting with a firm that is full service. Do we need to be everybody's CPA? Of course not. I think, and you would agree with this, Craig, a lot of people, it's a good exercise if they use TurboTax in certain situations, right? That's a great exercise to see what comes in every year and what goes out. But in order to provide holistic advice, we have to know all of those things. And I think that's the differentiator. We don't put things on our website where we say we do all of these things because we have a friend down the street that could do that. We do everything at one table, right? At our conference room in Inverness, our conference room in Downers Grove. And we put together plans that coordinate everything. So the reality is, from my perspective, is it should be one single phone call because my team will deliver all of those professionals at the exact same time to help you retire, to help you with your estate. And we represent not just you, your spouse, we represent the entire family. And if that's not the feeling that you're getting from your existing counsel, then we're just here to tell you there's a better way to get it done.
833-964-PLAN, 833-964-PLAN. Connect with us online, getretired.stay-retired.com. That's getretired.stay-retired.com. Get the comprehensive advice, the holistic picture, the true end-to-end planning, service, and strategy that you need, and to be quite frank, you know you deserve. All right, you're listening to Craig and David Bolanos in the know with VestGen Wealth Partners, AM 560, The Answer.
Would you like a dose of knowledge? Good, because Craig is back and about to fill your retirement prescription. Back to In the Know Radio on AM 560, The Answer.
Part of leveling up your game, part of getting to that next level is thinking about these long-term secular thematics, and I'm convinced it's now here. We haven't seen any employment data now for what seems like 2 months because of the timing of the government shutdown. But I have said, and I'm going to say it again here, I think when we do get the jobs data next up, I think the unemployment rate is going to be as high as 4.5%. And that's no one's fault. It's not President Trump's fault. It's no one's fault. It's just how quickly things are evolving. And a big part of that evolution, everybody knows, is artificial intelligence. And I think the jobs the jobs that you haven't seen lost, but they're going to start showing up in the data. Again, those job losses are coming from companies firing workers to free up money to invest in artificial intelligence. And that'll probably be the story for a while to go. But then it's going to shift, and it's going to shift quickly, where all of that investment in artificial intelligence, we're actually going to hit a pivot point where artificial intelligence actually starts taking the jobs. And I think one of the things you've got to be thinking about in 2026 is, what can I invest in that artificial intelligence can't replace? And what can I be invested in that artificial intelligence can't reprice? Oh, let me say that again. What can I invest in that artificial intelligence can't replace? And what is it that I can invest in that artificial intelligence can't reprice? I think that's going to be key. So, David, let's talk a little bit about how VestGen Wealth Partners, this family office, has an institutional desk that allows us to think beyond the basics of stock and bond portfolios. Because, guys, it's time to grow your diversification, to diversify your diversifiers. David, lead us through an overall conversation about things people should be considering.
Well, I think you set that up well in this sense, which is, what are some of the things that artificial intelligence can't take away? The first thing that comes to mind is hard assets, something where there's a finite amount of it. And there's lots of examples of that. Real estate's an example of that. I think energy is an example of that right now as we go through this energy transition. Well, let's just start with those, right? So let's connect the dots on some of them. Let's talk what powers AI, which data centers is the first thing that comes to mind for a lot of folks. Data centers today is not about finding a rectangular plot of land somewhere and then just building this huge warehouse that's going to hold all of these servers. If you can might be able to acquire the land, but you're probably not able to acquire the power right away. So the investors that are doing this, right, are doing this in a way where they can see ahead to say, we're going to acquire this piece of land. It's a very strategic part because we have the power to actually power the data centers when they get built. And I still think, my personal opinion, we're at the very beginning stages of this, right? I mean, this has probably really started to heat up in 2022. That doesn't mean that AI wasn't around before that, but that's where this is in. We're in 2025, getting to the end of the year. This is where all the money is going. And if it's me, what I'm saying is the big cap technology stocks that are the most common examples of artificial intelligence, I still think that needs to remain the core of everybody's portfolio. But if you're thinking to yourself, we've now had 3 good stock market years in a row, you want to perhaps diversify out of some of those names, but not sit in cash, then the way that we do that is we start to look at alternate ways to play it. And I would look at it in alternate ways of hard assets linked to AI, the data centers, how we power those data centers, and the real estate that's required to do so.
Absolutely. So the theme that we're discussing is AI is here. It's already changed the world. You might not see it visibly, but you know the underpinnings have already taken a foot. And you need to be thinking yourself, you need to be, I call it being curious. Be curious and start asking yourself, what can I invest in that artificial intelligence can't replace? And more importantly, what can I be investing in that artificial intelligence can't reprice? David just mentioned that the core of your portfolio does need to own technology because we've all learned that disruption coming from innovation is a long-term investable thematic. But think about everything that's downstream and upstream from there. Artificial intelligence does not exist without the data centers. So how are you participating in data centers in your portfolio? Artificial intelligence with data centers is useless unless the data can leave the data center. That means fiber optic networks. That means cell towers. The data center, the cell towers, the fiber optic networks, they are useless unless you have mass amounts of power generation. Everybody, a 1 gig data center is the equivalent of 867,000 residential homes. That means a 10 gig data center is equivalent to 9 million U.S. homes. This isn't a discussion about whether we're doing it with green energy, brown energy, this or that. It's just a thirst for energy. So energy becomes an investable thematic, just as certain forms of real estate become an investable thematic. And I think you need to figure out ways to start getting doses of that into your portfolio, because you know that you only got to get wealthy once. I say it again, you only got to get wealthy once. If I ever meet someone who brags about getting wealthy twice, well, you know what that means? That implies that they lost it one time. Don't ever put yourself in a position to do that. You need to be diversifying your diversifiers, and that means thinking beyond just publicly traded stock and bond markets to get access to these other investments that can be done in such a way that they're more stay wealthy. David, give us like a more specific example of how we structure that through VestGen Wealth Partners.
Yeah. So the acronym that we use is HELP: hard assets, essential service, long-term cash flow visibility, and privileged position, right? Something that's hard to replicate. The reason that we look to these assets is not only are they in thematics that we're very bullish on, but they also provide some tax efficient cash flow for non-qualified accounts. So if you want to participate in data centers, yes, you can buy publicly traded stocks that own those data centers. You can also invest in the privately held companies as well. And the design of those investments oftentimes is a combination of capital appreciation plus income. And if you're trying to get retired and stay retired, you need income. And what I would say is, in a lot of cases, the income generated from these investments is higher than what you can get from traditional publicly traded stocks. And in addition, a lot of the income is coming through as a return of capital, which is a fancy way of saying it might not be fully taxable to you. So if you like that combination of long-term cash flow visibility, inflation hedge, tax efficient income, then just know there's ways to get that without having to just buy a mutual fund or an ETF. This is not a replacement, again, for those strategies. These are complements going into 26 and 27, just different tools to add to your tool belt as you look to diversify out of publicly traded markets. Now, why do we want people to consider that thematic? It's really because correlations between some of these publicly traded asset classes have been high, meaning all things are moving at the same time. So you could say, hey, look, I own some real estate stocks, but the reality is if the stock market falls 25%, it's likely that all stocks go down. What we want is something that might not be moving at the same pace or in a completely different direction. That's building in some of the ballast to the portfolio, and now is the time to take a look.
833-964-PLAN, 833-964-PLAN. Go out to our website, getretiredstayretired.com, getretiredstayretired.com. Let's talk about an investment thematic that is everything that artificial intelligence can't replace and everything artificial intelligence can't reprice, because we're here to help you. Craig and David.
It's more In the Know Radio with Craig Bolanos on AM 560 The Answer, where his goal is to pummel you with financial know-how until you say uncle.
Hey, from time to time, we want to make sure that you're keeping up on the speed of events in this space that is what I call storages of value. Whether that's various forms of precious metals that, yes, you can and should be involved in, because I got news, everybody. De-dollarization is a real thing. De-dollarization is a real thing. The world has not turned its back on America. America is exceptional. America is wonderful. We remain the world's bank. We remain the freedom of beacon and hope, and we attract capital from all around the globe. But the reality is, Other countries and foreign central banks have decided, rightly or wrongly, that they're no longer going to be as dollar denominated as they once were. And if they're not going to be as dollar denominated as they once were, no one's out there selling treasuries. No one's out there selling U.S. assets. But you know what they are doing? They're not buying as much of it every single month. And if they're not buying as much of it every single month, where's that money going? Well, that money is clearly flowing into precious metals. That money is also flowing into various forms of digital currency. And guys, here's the information you need to know. There is a Bitcoin build out going on. France, Germany, Sweden, listen, they've all discussed or proposed a national Bitcoin reserve. Heck, in the United States, the Department of Justice just seized $14 billion worth of Bitcoin from that Cambodian crypto scammer. My point of this is, though, oh, wait, Florida. Everybody likes Florida. Free Florida. If anybody's going to pull off free property taxes, zero property taxes, it's probably going to be free Florida. But the Florida Senate just introduced a bill to buy and hold Bitcoin. And let's also look at the industry advances. I call them, it's not just Bitcoin build out, it's the industry advances, the big banks, the brokerages. They all announced crypto roadmaps lately. Look at what JP Morgan said, that they're going to let their institutional clients use Bitcoin and Ether as loan collateral. Loan collateral by the end of the year. Schwab just reported plans to spot Bitcoin and crypto trading in 2026. Citibank, they're launching a crypto, Citibank of all places is launching a crypto custody service. I can go on and on and on, but you have to pay attention to where the money is going. I mean, think about even the noteworthy ETF news, like the Bitcoin trust that surpassed $100 billion lately, being one of the most profitable. In fact, hey, how about this? How about 4 of the 11 cryptocurrency ETFs that debuted 18 months ago? 4 of the 11 are the largest, most successful exchange-traded fund launches of all time. So are you talking digital currency with your advisors? Are you talking stable coin processes with your advisors? Are you talking precious metals with your advisors? I think you should. I didn't say everybody should invest in those, but I think you absolutely need to start looking at it, because when there is disruption, there is incredible change, and there is a thirst for a storage of value. And I think now, that's Craig, really important.
I'm sorry to interrupt, but you got to go back to this. How much money did you say was in those crypto ETFs? I mean, I know the numbers, but I want you to say that one more time, because I don't know if everybody fully appreciates the amount of capital versus what's in a normal ETF.
Well, here, just one single cryptocurrency ETF just surpassed $100 billion in assets. And that's just one of those ETFs. $100 billion in assets. Guys, what makes things go up? It's not anything but money flow. Money flow makes things go up. Does a company's stock price go up because it had better earnings? No. A company's stock price goes up because money, cash flows into the stock. What drives digital currency prices? Money flowing into a scarce asset that is finite. Yeah.
Now,
David,
when I'm thinking about this, though, I mean, so look, clearly that's a lot of demand from individual investors, perhaps buying those ETFs. But are we at a point now where you could have the issuers of these big crypto ETFs actually buying or allocating money to these, meaning like making a market, meaning if I'm an ETF issuer, but I also manage money for clients, I mean, they could kind of build a market if they just implemented those into client portfolios. The clients might not even want to own any of it, but they might not even know that could be in their accounts one day. So it's almost like they're making a market for their products if they have discretion on those accounts.
Yeah, David, some people might call it self-dealing. Some people might call it responsibility. It doesn't matter how you get there, but some of the biggest ETF sponsors on the planet manage all of these LifePath, all of these freedom funds, all of these target date funds. And we created awareness on this radio program because, listen, if you're a listener to this radio show, we've got common elements. We are fellow patriots. We get things together. My point is, in April, some of the largest product creators who also manage portfolios made 1% to 2% allocations into digital currency using the very funds that they manage and support. Yeah. Listen to that. So this is not a recommendation for anybody to buy digital currency, but this is a recommendation for you to do your homework. This is a recommendation by me for you to be curious, for you to challenge the status quo, for you to learn more. Don't get on any bandwagons, but make sure you're an excellent student, and your partners at VestGen, Wealth Partners, we can help you get educated, whether it's precious metals, whether it's the de-dollarization trade, whether it's digital currency, wherever it takes you, we'll help you get there because you need to future-proof yourself. And future-proofing really matters because something David's talked about passionately, and I'm going to invite him to discuss it again, is, David, it's more expensive to go to Europe than it was in January. It's more expensive to go to Mexico than it was in January. Heck, it's more expensive to go absolutely anywhere. So while the Fed and the government's going to keep measuring CPI and PPI, the Consumer Price Index and the Producer Price Index, I don't think that's really doing a good job of talking about the currency inflation and currency risk we all have. So, David, how does this tie into addressing just that?
Well, I think it comes down to having a plan, right? We talked a couple months ago about the way that we do financial planning, the way that we've modified a lot of client financial plans over the last 5 years, because the basic assumptions that are built into these calculators are long-term averages that we don't believe are applicable to the current time period we're dealing with. And when we run these financial plans, we're running multiple scenarios of above average inflation. And then once we have those numbers, then we can reverse engineer the investment strategy. And the great thing about building out these investment strategies is it's not a one size fits all. There's lots of different opportunity sets that people can choose from. But if there is a thematic that I think you've done a great job on today, Craig, it's getting educated. So it's making sure that your equities are generating growing dividends. It's taking a look at your geography. If there's not a catalyst to get the dollar higher, then do we need to consider having dollars outside of the US for the first time in 15 years? It's about owning things where there's only a finite amount, what I call hard assets. And then it's about creating income with a built-in inflation hedge, which is contractually obligated through some of these non-traditional investment strategies. It's not just one thing. I think it's all of those. But the only way to figure out how to kind of put those puzzle pieces together is at the very core of what we do at VestGen, which is good old-fashioned financial planning. Because once we have the plan built, then it's easy to put the investments in. If you do it backwards, you're always going to be chasing your own tail.
833-964-PLAN, 833-964-PLAN. Get retired, stayretired.com. I invite you to be curious. I invite you to learn more. If you listen to AM radio, it's because you're like us. You're an information junkie. You want to just do the very best that you can because you know that you control the outcome. It's you against you. Let us help you get you out of the way and elevate and level up your game going into year-end 2025 to be successful in 26. Craig and David, in the know, AM 560.
Okay, Windy City, get ready to be blown away with a hefty gust of financial know-how. You're listening to In the Know Radio with Craig Bolanos on AM 560. The Answer.
So much information, so much knowledge, and so much opportunity. You need to seize that knowledge. Be curious. Think about the things that David talked about with us today. That movement. It's no longer the 70s. It's no longer the 90s. Guys, it's 2025. Have you elevated your game from index mutual funds, from index ETFs into direct indexing? If you haven't, you know you got to. Away from that, we talked about investing with permanence and definition and taking advantage of bond swaps, which you can only do when you've got permanence and definition. And of course, do not forget that investment idea, that secular long-term theme of what can I invest in that artificial intelligence can't replace, and what can I invest in that artificial intelligence can't reprice. I mean, that's so powerful. Sit with that for a minute. What should I be investing in that artificial intelligence can't replace? And what should I be investing in that artificial intelligence can't reprice? That's that theme of investing for scarcity, investing for undeniable truth, investing in the data centers, the networks, the fiber optics, the energy production, and all of those hard assets, essential services that provide long-term visibility and put your portfolio in a privileged position. And of course, think about the storages of value. Understand that de-dollarization is real. I think people are jealous over America's exceptionalism, but de-dollarization is real. And that's why you're seeing this outsized movement. It's not temporary. That outsized movement in things like precious metals, the outsized movement in various forms of digital currency. And look at the structural build that's happening by governments, states, financial institutions. There's a lot of stakeholders in this stuff, guys. They're not going to let it just disappear. And when those structures get further built, they attract more capital. And as more capital comes in to a marketplace, asset prices tend to grow. All of it's about making individual decisions on what's best for you and your family. You need to work with a multi-family office, a diverse group of professionals that can bring it all together under one roof. The investing, the financial planning, the tax modeling, preparation, estate and legal, and of course, all forms of long-term care, which remains the avalanche issue in American financial planning. So I invite you to be curious, connect with myself, Craig Bolanos, connect with David Bolanos, our entire team at VestGen Wealth Partners, 833-964-PLAN. Get retired, stay retired.com.